Hello, everybody. Hello, traders, investors, whatever you do in the market. You're going to have the advantage of hearing from Tavi Costa. I've interviewed Tavi several times over the last few years, and Tavi has really been on top of what's happening economically and market-wise. And I want to welcome you to TradeGate Hub, Tavi. Thank you very much for taking some time out to be with us today.
Well, it's my pleasure to be here, Dale, and I should call you Coach.
Yeah. You know what? At first, I didn't like the nickname because it means, you're retired in a way. You're not on the field making plays anymore. You're just telling people what to do. But you know what? It's really quite a compliment to be called coach because it implies, whether it's true or not, that you have some knowledge
Implies a
to
lot of
share.
experience. Yes.
And I don't have one original thought, so it's what I've learned from the universe over the years, from people like you, from people I've met interviewing from the floor. It's a compilation. I'm not afraid to ask questions and always open to learning. We either grow or die, Tavi.
Absolutely. Yeah.
What I see growing right here with your graphic is Treasury bond issuance. And, I'm looking at this trailing 3 months in millions USD. And actually, treasuries have been fairly buoyant over the last several weeks, even though short-term rates have been going up. So I wanted to ask you about this supply that you have that's heading up sharply, especially since the pandemic. Um, is there going to be, I've heard, a flood of new issuances hitting the market early next year in front and with a taper going on? Is there going to be a supply issue for treasuries coming up?
I think we're going to see that. I personally think that it's one of the macro themes that we're going to see in the next year. It will be this issue where we're transitioning away from having short maturity bonds as part of the large percentage of the average outstanding of debt in the US towards increasing that maturity. And so we're letting most of the T-bills outstanding to mature. We're seeing levels we haven't seen before, levels like $400 to $500 billion worth every 3 months of T-bills basically expiring. And so at the same time, we're seeing this major issuance of notes and bonds on those long duration instruments, which I think will continue. That's a transition we saw coming out of the global financial crisis. And we're seeing now again out of the COVID crisis. And if you were the government, why would you not try to increase?
Lock them in.
Right. Yeah. I mean, wouldn't you do that? Why would you not? That just makes a lot of sense. The problem is that the suppression of rates has been manipulated by the Federal Reserve. I mean, how has it not? If they are buying 35 to 40% of this chart of the Treasury issuances of bonds and notes, because that's what they're buying. They're not buying T-bills anymore. They haven't bought any additional T-bills in a very long time. They've been buying bonds and notes. And so if they
and MBS securities
too.
Why do they need to support the housing market by buying mortgage-backed securities when we have prices as all-time highs and a shortage of homes? Why do they need to support that?
My answer for that is you have to dig into what is the ownership of the bottom 50%. Why am I saying this? Because I think it's a huge part or focus of the fiscal agenda today is this peak inequality issue. And when you look at the bottom 50% assets, they own about 40% of their assets in what? Real estate. Back in the global financial crisis, politicians and policymakers are blamed by the inequality issues that we have today that have grown through since those times. And
now hedge funds own their homes.
Yeah, that's true. A lot of
right?
hedge funds have been buying real estate here in Denver as well, because I'm in Colorado, Denver, or Denver, Colorado, and I've been seeing a lot of that firsthand. But
Okay.
not from us, but I've seen a lot of it. And I can tell you that this, when you hold 40% back in 2008, coming out of the global financial crisis, the bottom 50% lost about 84% of their net worth because of the declining housing prices. And unfortunately, well, that was what exacerbated this inequality issue, because the global coming out of the global financial crisis, a lot of the rich parts of the society owned a lot of financial assets, and we saw an inflationary force from then, really in financial assets more than anything. And so I think that propping up the housing market is one of the priorities of the Federal Reserve, and not allowing that to fall apart is one of the priorities, more than the equity markets, more than, of course, all of those are going to be very important. But I would say the housing market is top of the list, because of
Yeah.
this, rate of ownership that is given from the lower classes financially in the U.S.
Has that declined since the Great Recession? And are these new buyers like the millennials have come in, and we'll get to it, but I heard an interesting statement that 1 out of 5 new home purchases by millennials, the down payment is from crypto profits.
I
So
haven't
it
heard that
served,
one.
huh? Yeah. So, that's really amazing, isn't it? All the new wealth that has been made in something that I really never grasped. I mean, I could see a price chart and know whether to buy it or sell it, but still this new world of crypto, I don't know what your view is on it. I hadn't planned on talking about it, but I know that you really believe in the importance of people owning gold. And so I want to ask you a question. A lot of people think that part of gold's problem of not being able to advance has been because crypto has siphoned away capital that otherwise would have gone into gold. Do
Mhm.
you ascribe to that?
I think it has had some impact to that. Mathematically, I believe um, it has probably been responsible for about 20% or so of the gold correction. Um, However, when you look at gold prices throughout history, it's quite normal to see gold struggling when it hit new highs. Let's see if you can see can you see me flipping into charts through charts here?
I haven't, we're still on the net issuance of T-bonds and notes.
Okay, so let me share this correctly here, because I think there we go. That's going to be better. All right. So one chart that is calling my attention, let's see if I have it here first of all.
Gold supply, they're
No, this
popping
one right
around.
here.
Okay.
Back in 1978, you see here, this looks like a blip, right? This was a 15% decline over here. If you can see my cursor.
You know what? You're taking me back in a time machine,
Mhm.
because that's when my career in the markets started. They made gold legal for Americans to own again, and it came out at 200.
Mm.
I learned about the short side as a runner on the CME floor, and a floor trader put a short on for me in gold. It was a winning trade. I found out later that it was kind of a superstition that if your first trade's a winner, you're going to be haunted the rest of your life. I didn't believe it till the last year or so. Anyway, yeah, and then we had the breakout over 278, and the bull market to 880, I believe, was the level back there in 1979 when the Russians invaded Afghanistan, and the Hunt silver squeeze was a major news event. How's that for a history lesson?
Oh, now you know more
Huh?
than I do.
Huh?
You know more than I do. I am just I'm just following the patterns here, but I do think it's interesting how gold historically has really struggled every time we made new highs. I mean, it looks like a blip right now if you look at that 15% decline, but it was, if you're at the market there, I mean, it was not easy, just like it's now. And here is, after the 80s, it took almost four decades for us to get up to new highs again.
And 20-year bear market that bottomed again just a little bit above 200, the old breakout.
That's right. And then he got caught up in the global financial crisis. It went, poke its hat above the new highs, stayed there for like 2 months, and then it completely collapsed along with the global financial crisis, down 30%. Almost any technical expert told you got to sell this. This is breaking down. It was time to be buying it because it went out for another bull market for another 2 years or 3 years.
Right.
And here we are again. It's important to go back and look at the perspective of how prices have went above the 2011 levels. And now we saw this pullback here to about 15% as well. And it's been now kind of trading sideways and very frustrating. I mean, it's been very, very frustrating. I can tell you firsthand again, because it's, we've been allocating a lot of
Who's selling the gold, Tavi? Is it China trying to tap down on commodity prices? Who are the sellers? Is it hypothecation to tamp down on speculation in the metals? You have a view on it, the paper market compared to the cash and carry market, which at times really, like during the COVID crisis, prices crashed, but premiums exploded because there was no cash available at that time. So I'm just trying to figure out who's putting the lid on, who's selling it. Because last week, in fact, a week and a half ago, we had what looked like a breakout over 1820, 1830, and we got up to 1880. But then next time under 1830, it negated the breakout.
Yeah.
And same thing, everyone was calling head and shoulders bottom in silver over, I think it was 23 and a half or 25 was the neckline, 25 and a half. And then when it started closing back underneath that formation, it turned into another false breakout. I'm wondering who's hitting it. Who are the sellers? I don't think it's producers. Do you?
No, but I do think there was a macro event in the last week or two that have perhaps caused the sell-off of gold, in my opinion. And it's been not used as a reason behind the sell-off. And I think it is, which is the Turkish lira. Turkey has been having a lot of issues.
I saw that currency.
Yeah. And it's quite normal to see when you have emerging markets struggling with a currency crisis to be forced out of their gold position. So I think there is a big chance we're seeing that actually happening right now. But
interesting.
It just happened to be the case that right at the, when gold was breaking out, we saw this, all of a sudden the sell off in gold as well. So it's been yes, there was a renomination of Powell as well, that probably played a role into that too, which doesn't make a lot of sense as I understand the net change, right, from Jay Powell versus the other candidate, Brainerd, perhaps was a little bit more hawkish, but Powell is the most dovish Fed member or Fed president we've seen in history, as far as I know. And so, I don't think that changes much the picture here. I think the Fed
I'm actually looking for the potential of a low during the month of December, very tradable low.
On gold?
on gold. And you know, maybe it bottoms on just so you know, he could quiet down guys
Yeah,
like you, Tavi, that are maybe doesn't want to be called as much of a dove as he has been after he's saying kumbaya with Bernanke and Yellen
yeah.
at the beginning of his term, and maybe he presses the taper and increases the taper. But I'm thinking somewhere between, well, 1730 or so, 1700, big rally, but I don't think we put in a major low until we're around 1600, and that's because I think yields are going to head up, and it's pretty good competition. I think they're correlated pretty good. It's all about yields. So if yields are going to go, I don't know what your view is, say the 10-year to 2% or so, that too, even though they're not real
Yeah.
rates, okay, you know, it's probably still a negative real rate.
Yeah.
That correlation, at least for now, I think will hold up and take the metals lower.
Well, I want to show you a chart. I'm looking here. There's a chart that I put out about, this correlation between gold and 10-year yields. And you're claiming if you're talking about 10-year yields in a nominal terms or real terms right now.
In nominal, up to about 2%
So
from.
you think if nominal it starts to increase, you think that's going to hurt gold? Is that what you're saying?
I'm saying that it's going to be continued competition for gold because, you know, I'm not in the camp that rates are going to skyrocket. I don't think it's going to take much
Yeah,
to
I agree.
cave a leveraged market structure,
Yeah, I agree 100%.
economic structure. It's not going to take 4%,
Yeah.
5% rates, which would bankrupt the US. Can you imagine with
No,
all the debt that we've taken on trying to just service the debt
no, no,
with
you're
rates doubling?
and you as a trader, I if I have the move out of 1.5, whatever that is right now,
Yeah, yeah,
all the way up to 2.5 and
yeah,
3 or whatever that is, I'm out of that trade because I agree with you. I don't think he goes much higher than that. I think they're going to force it lower with some sort of yield curve control. But this chart that I have on the screen right now, I have it on Twitter, but I don't have it in my deck, as you
gold
can see,
spot and the 10-year. So they
nominal rates.
travel together
Yeah,
pretty
in the
much.
70s.
Yeah,
And I feel like a lot of people have forgotten about, well, correlations change over time. You know
right,
that very well. And
right,
so, I feel like there's so much certainty that if yields ever rise, gold is going to fall apart. But it's not really true throughout history. It
right,
really is not. I mean, look, this is a bull market for gold where I'm showing. So,
right.
um, I don't know. I think there's a possibility that what I think it's going to happen personally is, um, first of all, you touch on crypto. Crypto is the biggest libertarian movement, political movement we've seen in history. Period. It's, if you think about it, it's a parallel world, a monetary world being built because of a community just like the gold bugs that are
Yeah,
tired of a fiat currency system that has zero anchor, which
right,
is going to force, in my view, central banks at some point, as we continue to see liquidity coming into the crypto world, it will force central banks to reestablish that credibility by having an anchor. I'm not saying we're going to go to a gold standard. That's not my point. But I do think that in order to accomplish that, central banks will have to improve the quality of the international reserves that they hold. And if we're going to see that, I don't think you're going to be buying Bitcoin. I think they're going to be buying gold. And
great
so,
point.
personally, ultimately, I think we will see that demand being driven by central banks again in a very, very significant way. Yes, we're seeing something in the margin here and there. I'm talking about major buying from major central banks, the developed
Isn't that what
economies.
China's been doing for years? Would you call that major buying or not yet, Tavi?
Well, look, I'm not a, I, one of the differences between my views and the gold bug views, and not why, but one of the reasons why I also don't call myself a gold bug, is because I don't think this whole idea that the US is going to fall apart and China is going to take over the world, I don't subscribe to that view at all. First of all, let's just look at the total amount of debt. US is in trouble. We know that, right? Well, so is China. Total amount of debt in China today, it's about over 350% of GDP. That's not a fundamental quality that allows an economy to take over the world. They're not in the bottom. They're at the peak. It's quite different here. And so is the UK, so is any European country you look at, so is Canada and Australia and Japan. The whole world is indebted. So this idea is kind of nonsense in my view. But look, I think, yes, China is a commodity taker. It's not a commodity giver, given its fundamentals as well, natural resources. What are countries that are net exporters? Those are Brazil, Russia, Canada, even the US, not China, not India. Those places, if you are getting into a commodity bull market for the next 10 years, it's going to be a tough game. It's not going to be easy. They don't have they are not benefiters of this macro regime change, in my opinion. So I think things are going to change here, personally.
That's such an interesting perspective, Tavi. I'm so glad I brought you on, because it is a counter argument. I never really thought of it in those terms, that maybe the next decade, I'm especially constructive on agricultural commodities. The Fed can't print corn.
Yeah.
They can't make more coffee or cotton or all these commodities that have really been, parabolic, like the DBA and stuff. So that it could be to the advantage of the US and South America, producing countries, Brazil being, one of the largest bean producers in the world. And that's probably why China has been, making their connections in South America for food security.
Yes, and there's so many opportunities in that space, especially now we're seeing sell-offs in oil. Let's just use oil as an example. GDP is back above 6 percentage points or 7 percentage points above where it was prior to the pandemic. Okay, the peak of the pandemic. If you look at oil production, we're still 12 to 13 percentage points lower than we were back then. Those are the levels of imbalances that you see oil taking off. What a gift what's going on, in my opinion, right now with
this
oil
pullback.
Markets. Yeah, well, it's giving
$20.
It's funny because sometimes all of us feel this FOMO. All of us, sometimes, like, let's say a few weeks ago, I bought agricultural commodities. I was like, oh my gosh, I wish I would have bought my whole book on that. And then we have, I was like, how do I increase this position? I can't do it. It's moving too much right now. And
you always have too much on when you're wrong and too little on when you're right, Tavi.
That's right.
It's a head game.
But at the same time, the markets will always give you a second chance to come in. Always, this has always been the case. There may be some very rare exceptions, but there is always, if you have a fundamental view about something, there will be a pullback at some point. You will be able to come in, regardless if it's Bitcoin, Ethereum, gold, silver. You'll have that chance. I knew it was going to have that chance, and here we are. DBA pullback, the ETF DBA pullback. Yeah. How many people are buying that? Obviously not enough. So I think that's your chance. Here's oil. 3 weeks ago, everyone was pounding the table on oil, right? Not a year. Well, I remember.
Go back and watch a few of my videos.
I think I remember there was a reporter that called me in April of 2020, and she wanted to write a story, very sensationalist story about the oil prices going negative. And all I wanted to talk about was how energy producers were actually doing quite well regardless of oil hitting negative prices. That was really telling that this was some sort of bottom. It couldn't be more of a bottom of something hitting negative levels. And so no one wanted to buy that.
Because they were scarred.
I was just for fun looking at my tweets from back in April. So much crap that I got just for putting out stuff on energy, and it was ridiculous. And now everyone was pounding the table on that, and here we are. What a chance! We had a pullback again. This is the time for you to be. If you like the oil at 80 or 75, you must love it where it is right now, right? So I think.
Well, you want a contrarian buy right now? You got to buy the silver. I have a DSI of 9.
Look,
9. 9% bulls in silver. And that's where the euro was about 3 weeks ago. And that's a good segue because, part of what we're talking about, I don't know what your view is, but I believe that the dollar is the fulcrum of the wheel that all other asset classes spin around, depending upon the outcome and direction of the US dollar. And, people came in very bearish a dollar into the beginning of this year. And we now have a reversal of that. Now everyone loves a dollar. I actually think we're within a month or two of a significant dollar high and the beginning of a new bear market in the dollar. I don't know what your views are, but that can only make things more expensive. And that's when I think gold goes, because I think gold is not, check this out, not as much about inflation as it is about debasement. Yeah. And we're going to get the debasement in the dollar. It's the easiest sacrificial lamb right now is to let the dollar go. And you may rally stocks again, just on a nominal basis. It'll keep things going. Commodities go up. We could export easier. It takes pressure off emerging market economies. And, I was wondering if you might see some opportunities under some markets that were under pressure because of a stronger dollar, if that reverses. Gold's obvious, right? So what else is?
I think if you have that view, and I don't know if I'm in the same page, but I'm definitely, this is something I'm really considering. Okay, I don't have in the book right now. I am really, really considering this allocation right now. I'm gonna share it now. So it's Brazilian equities, and I've never seen, I'm from Brazil, I've never seen Brazilian equities so cheap in this environment where, I truly believe commodities, the bull market in commodities is just at the beginning. Of course, we're going to see pullbacks along the way, but yes. I think we had a significantly higher in almost any commodities you look at, including lumber too. Including iron ore and almost anything you can think of. And so the imbalances are just so large in the investment world of CapEx cycles in commodities, which is the chart I'm showing right now, that I highly doubt that the incremental dollar in the following years will continue to go to technology and out of commodity producers. I really think that that's not going to happen. I think we're going to see a larger allocation towards commodity producers in the next 10 years. And if that's the case, Brazil should not be trading at 6 times earnings. Now I'm talking about Brazilian equities in aggregate. Yeah. There are plenty equities opportunities in Brazil trading at 2 times earnings, 3 times earnings. I mean, that is insane. So
how do you do that, Tavi? Do you take the currency risk out of it? No. Do you buy it with the Brazilian currency, or you buy it dollar based?
Like I said, I don't have it in the book. So what I would say though, and why I don't have it, is because of one reason. We're going to have elections next year in Brazil. And so it's I think that could be, unfortunately, if we have a strong left party, Lula, okay, taking over again, then the game is over. Then Brazil is headed a lot lower, unfortunately. I think, I think if we have a significant political change in Brazil, things will go south, really south. Now, things are very depressed right now. And so if we have some visibility on the political side, I believe that I think Brazilian stocks are going to go way higher. And so you can make a trade here asymmetrically, where if you're wrong about the political side, and we do have a major left change in terms of the political regime here in Brazil, then you can take that as a mistake, and that's 1 or 2% of your portfolio. But the way things are priced in, they're not priced in for a major success. I mean, Petrobras, Vale.
I was going to bring that up. That's a combination of oil and Brazil.
All of those, yeah. Petrobras, Vale, even the banks look attractive. Everything. I mean, I'm looking at, very in depth, and I haven't seen Brazilian stocks that cheap. And so, it's something to take a look at.
I think a weaker dollar would help Brazil.
A weaker dollar would help Brazil. Well, look at the chart of financial conditions. That's another check that I have now. So I go through a process of looking at everything that I think it's risk. Obviously there's a counter argument for any trade that you have, as you know very well. Yeah. So there's things, in the Brazil that it's tough for me to get my arms around. And one of them, the political environment, I think we're going to be okay. All right. I think that's going to be a check in maybe a month or so. So I think it's going to be fine. The thing that is I'm struggling with is that I think the Fed is way behind the curve, as you just said about tapering too, way behind the curve on inflation. And so I think there is a chance we might see financial conditions tightening a bit here in the US. Yeah. And I think emerging markets have been pricing that in. If you look at financial conditions versus, I might have a chart on this, versus the US. I think I posted a chart on this. You can see here.
By the way, everyone watching this, definitely follow Tavi on Twitter at Tavi Costa. And he posts a lot of his best ideas. He doesn't just save them for his clients. So
there you go. Well,
yeah.
Where is it? It's right here. So if you look at this chart, so this is red line is emerging markets, right? And the white line is financial conditions. So financial conditions ease, emerging markets get better. Financial conditions tighten, emerging markets get worse. You can invert this and you will see it's the same line. But recently they have been diverging. Emerging markets are falling, and guess what? This is also falling. So in my opinion, which one is wrong, right? Well, I think emerging markets are right as far as the Fed is, really off balance here. So I think this has to go higher. Right. Can this go a lot lower? I think we've seen a lot of it already.
102 maybe?
But a little more could happen. So you don't want to fully allocate, I think. I think you want to, slowly add to your position. But the asymmetry, if you are right about the political environment, and if you're right about the dollar, oh my gosh. I mean, you could see a multiple expansion of, 3-4 times your money, depending on what it is. And so I think it's interesting, if you size it correctly. I'm looking at it. If you size it correctly, it could be an opportunity. But again, you could do that with silver miners, gold miners. I mean, the list goes on too. So
there are many. Do you prefer silver? The gold silver ratio recently has been moving against silver for a little bit. I mean, that big peak was over 100. Are you looking for, because I remember gold silver ratio being in the 40s earlier in my career. That was the mean. And I think we're about 83 right now, or 80. Do you think it's going to continue to contract, gold silver ratio?
Well, I'll be surprised. I think it's a gift that we're still being able to buy silver at sub. Oh my goodness, almost sometimes it looks like it could hit below $20 an ounce. And I'm like, if it does, oh my gosh, I'm just
Yeah,
gonna bet the
19.
farm.
Yeah, yeah,
but
there.
but yeah, I do. I love silver, as you know.
Okay.
And so yeah, I
All right.
prefer having a higher location. But it's tough to find though, silver assets. It's not easy.
SILJ, viable way to trade the juniors without trying to understand everyone's balance sheet.
Yeah, that's one way to do it. Um,
I noticed you do a lot of work, and I know we're running a little long, but you do a lot of work on miners that are in, shall I say, the discovery stage, or their exploration stage and making finds. And you do a lot of work on juniors, don't you?
I do. I think if there was ever a time for you to be taking on risk in a
Yeah,
in again, this is risk because it's very very deep value opportunity. I
yeah,
think that time is today. You have to have a loan. You're not trading that, right? I mean,
yeah.
if you're a fund investing millions into something illiquid that is really deep value, a property that has gold or silver in the ground, you're not selling it tomorrow because
No,
gold prices of, you're sticking with this for 3 to 5 years. So we launched a fund where we look for investors that are with the same mindset. Look, we're gonna be, really working towards having the highest quality portfolio in exploration space you could ever find. And so we think we're gonna go through a gold discovery age, where a lot of companies will find new gold discoveries. We haven't seen that in many years. We went through that in the 80s and early 90s. But really, that was it. And then the last bull market on gold, there was so much misallocation of capital and exploration assets that are not economically viable. So now we think there is an opportunity here where you can find, so how gold companies make money in exploration space, or at least appreciating prices stocks, is being successful at drilling. And
yeah,
if you look at the intercepts that we're seeing of successful drilling today relative to what we saw back in other bull markets, some of those companies on back of the results that we're seeing would be 4 times what they are today, 5 times what they are today. Some companies went, 5, 6 multiples, kind of like 5, 6 bagger type of opportunity
yeah.
because of those results. And today, if a company puts out good results, they go up 20%, 30%. So, you're basically holding, in my view, winning lottery tickets if you think gold and silver will go higher in the next 5 to 10 years. I think it will. And
Yeah.
so I'm okay holding. I think there's going to be a major wealth transfer. Too many people are looking at crypto as just the only way to trade on this. And I think there's going to be a lot of people seeing, wow, why didn't I not do that?
Yeah.
There's so much property you could buy in Canada, Australia, Finland, US, South America. It all depends on your view.
Okay. And so to get into this fund, they contact you at Crescat?
Yeah. Well, thanks for allowing us to do that. Yeah,
Yeah.
at Crescat Capital, we will, yeah, we're still if the fund is open, we're still looking for capital to put it to work. There's no lack of ideas. There is certainly a lack of capital, of people that have the same mindset. And so it's been great. We've been putting about 150 million or so into the space already. I think we're probably the biggest allocator in the exploration phase of this industry.
Wow.
And we financed about 95 deals already, through different private placements. And we're very committed to this. We hire a exploration geologist, Quinton Henney. Quinton Henney, for everyone, he made over $1 billion for Eric Sprott with
Oh,
one exploration success in Fosterview, which became Kirkland Lake, as you probably heard of the company, one of the big miners that was taken out by Agnico recently. So, our goal is to finance all those deals right now and be focused on that. And I spend more time with CEOs of exploration companies than looking at the markets now.
So as you can see, everyone, Tavi is like a gumshoe analyst, and he's probably a part-time geologist. And, if you have an interest in gold, I've been told that, you can make money buying, Yamana at 320 and riding it to 6 or 8 if we have a big move in gold. But when you're talking about the multiplication of wealth, I've heard, and it's really something that most people can't do on their own, that it really takes a team and people knowledgeable about the debt structure and finding the right holes to dig into. Because, Mark Twain says, what's a gold mine? Two liars standing over a hole.
That's right.
So you need trained people if you're going to do this. And I've known of Tavi and been talking to him for about 3 years now, and I suggest you check it out if that's your area of interest. Tavi, really enjoyed myself talking to you and learned from you. I learn from you every time we have a conversation. So thank you for having a giving nature and joining us on this new community I'm helping build. It's free for people to come here and just share ideas, no subscription fees. Just bring your charts and share and build a mastermind group. And you're welcome to drop in anytime, my trading warrior brother.
Well, if you allow me to call you coach, I would say you are one of the nicest guys out there. So thanks for having me. It's always a pleasure to talk to you.
Yeah,
and I always appreciate having a conversation with you. So thanks again.
Okay. Thank you very much. Tavi Costa, everyone. Hope you enjoyed. And if you missed it, the video will be up and we'll call it a wrap. Tavi, have a great holiday season, buddy, and a great winter trading season. And we're going to be doing this and not have the time lapse that we've had before.
Thank you very much. You
All
as
right,
well.
Tavi.
Take care.
Adios. That's a wrap, everyone. Remember, don't just count your mines or your coins or your bars, count your blessings, and have a